Woi, bro.
Apa dia?
Aku message kau 50 kali, tak balas.
Alah bro, aku tak ada time lah bro message. Aku sekarang tengah Nicole bro. Nicole lah, itu dia in sekarang. Tengah trending tengah kacau.
Kau cakap apa? Apa tu?
Nicole, kau tak tahu Nicole? Google kau tahu? Nicole kau tak tahu? Tak, Nicole app untuk belajar bro. Semua tengah belajar guna Nicole sekarang.
Ilmu
semua tengah guna Nicole.
Share sikit lah.
Boleh bro, kau tengok macam ni bro.
Okay.
Kau kalau kau lembab, kau kena Nicole bro.
Memang aku lembab sikit sebenarnya.
Bro, kalau kau nak laju, kau nak top, kau nak jadi CEO, kau kena guna Nicole. Kau tahu kena pergi mana? Digital.dynamic.org. 200 je bro tahun.
Aku buat tu aku tak lembab dah
tak tahu bro kapasiti kau macam mana. Tapi aku rasa Nicole ni boleh tolong kau lah bro. Confirm.
Okay. Berapa?
RM200 je bro tahun.
Boleh lah duit raya pakai ya.
Selamba bro. Ni kau tengok ni bro. Cahaya bro, kau tengok ni. Ini daripada Howard bro. Power bro.
Oi, memang cantik.
Apa ni? Jangan ambil akunya.
Okay.
Aduh.
Sorry. Aku teruja sangat lah.
Ni tak apa kita kongsi.
Welcome everyone. Welcome to Rethinking Balance Sheet. I'm Roshan Thiran and I'll be joined with Ravi Navaratnam shortly, and we have a guest today from MDV, Malaysia Debt Ventures. Aimi Aizreen will be joining us shortly on this exciting episode. And joining me today is our co-host and our buddy Ravi Navaratnam. Ravi, welcome to the show and always glad to have you. And as we consider some financial balance sheets, things that make people run away. But I think what we are trying to do is to unscarify the scary to many SME leaders and many business leaders who freed whenever we talk about financing balance sheets and trying to understand how this works. So you want to share a little bit, Ravi, on our guest today. We've got Malaysia Debt Ventures joining us today. What's that all about, and why is Malaysia Debt Ventures joining us today?
Hey, thanks, Roshan. Good morning, everybody. Today's show is, I think, where we left it off about 2 weeks ago. I think we talked a little bit about the difficulties of bank borrowings, and we said and this is the liability side of a balance sheet. It's how do you fund things, right? And I think the people that I thought straight in mind to go out there and say, okay, we had a lot of comments coming out saying, hey guys, can't go to the banks. Bank want to see, profits in 2020. That's going to be tough. Well, what are the other sources of debt financing? Thankfully, the Malaysian government, and we had the pleasure of working, Sage 3 did quite a bit of advisory work for Malaysian Debt Ventures, great clients of ours and dear friends. They were happy to come on board to share their knowledge and their thoughts that there are alternatives in financing in Malaysia, which is non-bank. And I'm very, very happy to have Aimi on board. He's the guy who is the go-to guy at MDV if you want to, raise money. He's got the task of building their balance sheet. So he's the right man for the discussion today.
And we're going to invite Aimi, but just a quick call out to Nicole.app. If you have not downloaded your app, Nicole.app, go to the website and download Nicole, which is one of the first Asia-powered artificial intelligence learning app in Asia. So with that, let's bring on Aimi to join us on the show. Aimi, welcome to the show. Chief Business Officer at Malaysia Debt Ventures. What a amazing title, huh?
Yeah.
I think it'd be appropriate to start a little bit, just to ask you to share a little bit in terms of what is MDV, what you guys do. Give us a bit of a background. I know it started long time ago, right? 2002, if I'm not mistaken.
2002, yeah, right, yeah.
But it's been progressing, and you guys are doing some great work. So tell us a bit about MDB and what you guys do.
Sure. Thanks. First of all, good morning. Thanks for inviting me, Roshan, for this event. A bit of background from MDB before we start off. We were set up back in 2002 by Malaysian government. We are 100% owned by Ministry of Finance. If you recall, back then there were a lot of MSC status companies that was mushrooming in the country. But unfortunately, those companies are unable to actually secure financings from commercial banks for a few reasons. First of all, they don't have P&L and balance sheet, as Ravi mentioned just now, and they don't have the tangible collateral or security for them to actually secure financing from commercial banks. Because of that, the government decided that they need to set up organizations to actually assist all those MSC companies. So then 2002, we were set up. So we played our role in helping all those ICTs to cover the ICTs, in fact, IT and ICTs. So over the years, we have actually expanded our role, our mandates to cover other areas besides ICT. We cover into green technology, biotechnology, and recently, for the last couple of years, we have covered the emerging technologies, such as probably you had robotics, IR 4.0, to cover the other industries, including of logistics as well. So that's pretty much what MDV role is about. And we would like to see that we are the technology financier of the Malaysian economy, Malaysian market. We like to known as to serve the underserved, pretty much. Basically, those companies are able to secure financing commercial banks because of reasons I mentioned just now. So that's pretty much it. Some of our top line numbers since we first incorporated, we have disbursed perhaps up to 13 billion so far. We have actually offered up to close to 1,000 credit lines, 900 companies we have approved, and we have aggregate fund size of about 4.1 billion. That's pretty much our top line numbers.
Wow. And what's the difference between what you guys do and commercial banks?
Okay, first of all, mandate wise, we only do technology. Pretty much ICT, green technology, biotechnology, and emerging technologies. We don't do the normal brick and mortars, which, for example, property development, constructions, and all that stuff. That's the first difference. The second difference, as you know, banks will adopt 5 Cs. We do, but there's one particular Cs that will not necessarily we need to tick the box before we actually look at financing the particular customer or particular company. That is the collateral. In our words, it's security lah. So we're talking about security. There are 2 types: tangible, intangibles. Of course, when commercial banks discuss or when they actually negotiate with customer, the first thing they ask is whether you have tangible security to secure your financings. We don't do that. I mean, we ask for it if they have, but more often than not, the customer that approach us wouldn't have tangible securities. So rather than boils down to the tangible security part of it, we'll look at the soft collaterals, the director's guarantee, the assignment of proceeds, or the debenture. That's pretty much how we differentiate ourselves with the other FIs out there in the market.
And speaking about since I guess it's sort of a government initiative at some point in time in 2002 when you set up. But are there any specific government programs out there specific to?
We have participated a lot of programs. Some of the funds that we participated have exhausted. For instance, we participated in Green Technology Financing Scheme. That is to cover the renewable energy and green technology. We are still there, actually, to be honest, but we are still waiting for the government to actually come up with the GTFS 3.0. We participated in GTFS 1.1. We are the biggest supporter of that scheme. We won the award, actually, from CGC, which at that point in time, we financed a lot of solar projects and green initiative, mini hydros, biogas, and biomass. Yeah. So that's part of the government scheme. At the moment, we have one. When COVID-19 first hit the world and Malaysia, I think the Bank Negara came up with a special scheme to actually assist the SMEs, SRF, special relief facilities, and they still actually enhance those products. To jump into bandwagon, we actually went to our stakeholders, essentially MOF, MOST, and see where we can play our role. So that's where we come in actually into assisting tech startups. So we were given 100 million soft loan from the government to actually tech startups, to assist the tech startups. We have actually rebranded the name to LIFS, Liquidity Financing for Tech Startups. So it's 100 million soft loan given to us. We have launched this back in May 2020. We have committed about 60 over million. we are currently assessing another probably about 15 to 20 million. Not much left there. Perhaps I would say another 20 million left in the coffer for us to look at this package.
Okay, and how does it work? I mean, do you take equity in the clients? What's
not directly for venture debt or MDV tech? We will not participating in equity. We purely debts. But what we have under the venture debt scheme is we have an equity kicker in warrants. For the next round of funding exercise, we can always exercise our warrants to take up 10% of the value of the loans given. So, which is good because at the end of the day, 10% of the value given will not dilute the equity portions of the stakeholders. So, that's the beauty of our scheme, rather than coming in and try to dilute the shares of the shareholders.
And what's the process you go through, in terms of testing KYC and so on and so forth, like understanding the guys that you are funding? What do you look for?
Okay, the thing is, like I said, we have two. I mean, currently our assets currently stands at about 1 billion. A good 90% of our assets are pretty much into project and contract financings. Okay, under project and contract financings, the main criteria where we look at is, first of all, we need to look at the cash flows of the project itself, and the assumptions used. And of course, we look at the counterparties, who are the one paying this customer, because we need established or strong counterparties. So when we do the assessment and the cash flows, we actually scrutinize it in details before we decide that this financing is good to come to MDV. And of course, like I said, rather than looking at the collateral, we look at the character, the experience of the promoters. These are the essentials criteria that we look at. Rather than looking at sorry.
So I assume because it's tech, profits, all these the stellar track record, those won't be a major consideration, right?
It won't. Like I said, we pretty much looking at the cash flows that are provided to us, and bottom line is credit is how they pay the principal as well as profit. So P&L and balance sheet is part of the documents that we want, but it won't be a major item for us to consider the financing. Okay.
And are there specific returns that you're looking for, in terms of rates or tangible things that the expectations?
Okay, on this basis, I need to touch on our funding because we have one source of funding, which is pretty much the sukuk that we raise. We used to enjoy government support in terms of guarantee, but we are currently on our own, which we have our own ratings by RAM. So unlike commercial banks, which have different sources of funds from deposit taking, the treasury, all that. We only have one source. So not to qualify why we're charging higher, basically, but essentially we are, and of course we are taking high risk to the type of customer that we want. So I wouldn't say that we are the lowest in the market. We are also not the highest in the market. So it is in the range between 8 to 9% currently. That's how we charge. That's how much we charge the customer now.
Okay. And do you have a specific ticket size, in terms of how big it can be or how small a minimum?
We do have a cap. We do have a cap in the sense that because our small size shareholders fund, we have a cap of 50 million per applications for project and contract financing. And then 80 million for single customer limit. How we access it depends, like I said, because of project contract financings, they have finite tenure as well as finite value in terms of the contract. So the amount pretty much on the requirements of the costings and how we assess the cash flows. There is no absolute numbers because we don't so much doing general working capital because it's very objective driven in terms of we want to finance this project and it's based on the cash flow given. So it depends. If the project is high enough, we can go up to 50 million. Otherwise, it can be 1 or 2 million.
Okay. And I'm gonna bring Ravi back to join us. Ravi, welcome back. And I know Ravi has a ton of questions and thoughts on this matter also. So Ravi, what any questions you have for Aimi? And if any of you out there have any comments or questions, please put them in the chat, and we'll be happy to take them as we go on in this conversation. Yep, go ahead,
Maybe
Ravi.
I'm not really questions, but maybe I can just comment and sum up a little bit of what was being said, hearing out very carefully what Jeremy has been talking about. I think the key takeaways, and Roshan, we've been trying very hard to help people during this crisis. So I think there were some important takeaways, and we can probably talk a little bit about this. The first is we're talking about fairly small ticket size, 1 to 2 million, well in the range of mid-sized businesses. I'll also say that the key takeaway here is there is all those issues about absolute profits and last year's profits, but really to go to MDV with a project. If you've got a viable project, you could raise money where banks may not be able to help you out. You can go to MDV. I'll also comment a little bit on the rates. That's 8 to 9%. Again, that's an important point because I think a lot of people are going in very, very thin margins. And if you can understand the banks looking for 8 to 9% return, the debt financer is looking 8, 9%. Again, in the project, when you're doing the computation for the project, you need to be way higher. Your return is going to be about 15 plus. You probably may get it wrong. If you come in at minus, you lose another 5%, you still got profits. You lose by 10%, you're running loss, but not a very big loss, and hopefully your capital can take it. So I think there's some important lessons there when you think about funding on the balance sheet side for SMEs to think a little bit about it. But I think I'd just like to explore a little bit about this idea of tangible security versus intangible security. We talked about guarantees, debentures, but what about patents? Is that something that MDV would look at?
Well, we do. Thanks, Ravi, for the questions. I think we do. Those days we have participated in a scheme also by CGC and Bank. We call it Intellectual Property Financing Scheme. But unfortunately, those schemes are no longer around. We actually take those IPs as a collateral for as a security to the financings. Yeah, we do. But unfortunately, like I said, the scheme is no longer around. We have actually exhausted the funds. But even that, without those schemes, we are still taking some of the IPs. Like if we feel that there's a value to the IPs.
I couldn't agree more with you. And the largest companies today, Google and so on, don't actually have tangible assets. They're all about.
Yeah.
And that note, I think Roshan and I have actually invited somebody from Average tomorrow next week. I'll talk about intangible. The Singapore government gives a lot of grants to actually explore the value of the intangibles. And that's where the economy has to go. We talk about IR 4.0 and all. It's about how do we actually get intangibles on the balance sheet. So anyway, thanks. At least I would take, my take is this, Jeremy, is that at least MDV's got experience doing it. So we've got.
Some are painful, to be honest. But like I said, we've learned over the years to do things are different from what commercial banks have been doing. So like I said, the painful experience actually taught us how to move forwards and how to actually explore new things in the market.
Yeah, that's excellent what you guys are doing out there. In terms of the crisis and financing, but you also mentioned, I think what was interesting is you mentioned startups, but I think we can get a little bit more color on that. I mean, if you could just explain, when you mean startups, what kind of startups are you really looking? I mean, I think everybody's got a different idea what a startup is. Is it 1 year to business, proven his product?
Well, if I were to actually relate this to our product, we call it MDV Tech. It's meant for the startup that has, as I mentioned just now, has a VC back or venture capitalist back in their stable. So this is where the company which has already received funds, they have a bit of cash to actually move their business to a new level. So with that, of course, the due diligence part of it is being more simplified because the venture capitalist has done their works in terms of the business. So for us, basically, is to extend runway from the Series A which they have secured to Series B.
Right.
So it's meant for tech startups where they have actually starting to commercialize their product and on acceleration growth, or before they actually reach their second round of funding.
Oh, thanks for that clarity. That's helpful. I think I know Nizam couldn't come on today. He was suddenly called.
He apologized on behalf.
No worries about that. But in my conversation with him, and we were talking about our friends in Cradle and so on. So this is when they the first round with Cradle, etc., if you go out and get the private equity in, looks like the good thing is you can even bring in MDV as a second phase. So the message out there is those who've already got venture capital fund and you don't want to dilute further, MDV is a great source of additional funding.
Yeah, like I said, unfortunately, the mandate given to us is not to participate in direct equity.
Sure.
So we are still into debts. But like I said, we have the equity kicker in terms of warrants. That's pretty much it. But if the company should not be worried about the warrants clause there, because like I said, the amount is pretty much minor or very small.
Yeah, and you don't have the dilution if you went for another round of funding.
No. If anything, it would be very, very small.
Very, very small. So I hope that's a that people can get from this. Just a quick one. I think our friends at Leadernomics, they've been out there in Singapore funding, but there's a great Malaysian entity, which can provide them funding. Would Leadernomics, be able to raise money from MDV?
You're most than welcome to actually come to us. Most than welcome to come to us. Like I said, most than welcome.
There's no free lunch here. I mean,
no. But we will do the normal KYC or assessment based on our preset criteria. But you're most than welcome to actually come to us.
No,
I think
we will definitely explore.
Sure.
Yeah, there's a great story there to follow up in going forward. But I think the whole idea is that we've got non-bank financing in Malaysia. That's not really well understood out there. I'm not sure how many people have heard about MDV, but it's there. It's useful, and it's really useful if you're going to move the tech company. But coming back onto the idea of tangible, I really hope yourself, on patents and so on. I hope that in this budget, perhaps the government can look at something being allocated because the world. If you talk about IR 4.0, that's all about intangible, and the whole of our financial sector very much skewed towards traditional lending, and we probably need more of this intangible stuff out there. But maybe, Aimi, if you can actually a little bit more explain the products that you do. Is it just purely project finance, or could I come and get, if I wanted a guarantee from you, could I come and get a lot of projects we do guarantees, certain types of stuff. Could we come and raise a guarantee through MDV, or would you help for if I'm trying to, not a completed product, but if I'm trying to develop a product, could I come and see you?
Yeah. Before I answer your question, I think part of your point just now with regards to innovative financings or technology financings, I like to mention that we have two stakeholders here. One is MOF, which basically covers the funding part of our side, and we also have MOSTI as our stakeholders. So good thing is we have MOSTI, Ministry of Science and Technology. They're very dynamic and very aggressive in terms of how to promote these new technologies or innovative technologies. So for the last couple of years, they actually come up with a lot of initiative to actually push the technology space. So we work closely with them. The engagement with the teams there are on weekly basis. So we still try to work closely to get more kind of initiative from them. So hopefully MDV will play more roles in the future as far as technology space is concerned. Going back to your question just now, yeah, we do. Like I said, essentially the products that we have, we have revolving and non-revolving. So for a specific project, more often than not, if it's a contract financings, the package will come together with a guarantee.
Oh, brilliant!
Yeah, it does. So besides the non-revolving facilities or term loan that we give, which based on the assessment on the cash flows, we do provide bank guarantee as well. And we do, if there's payment needs to be made to overseas buyers, we also provide LC product to the clients.
Nice. So we will take a quick shot. Let's take a quick shot, 30 seconds break, and we'll come back with our final thoughts and some closing advice. Welcome back to Rethinking Balance Sheets. I'm here with Ravi Navaratnam, and today we have a special guest, Inche Aimi Aizreen from MDV. So let's get Aimi back on the show. Aimi, really happy to have you here with us today. And as we kind of wrap up this segment, one of the things I think we always want to know, especially SMEs, watching it, just general business advice you would give us in this time of crisis. What sort of advice would you give to SME business owners and tech owners? Since your primarily concern is tech startups.
Well, it's pretty much survival mode now after what hit the world and the economy. Well, first of all, I would say that prudent spending is essentials. I know spend when it's only needed. I think we've seen a lot of companies has laid off some painful measures they have done in terms of laying off some of the staff. But this can be avoided if you feel that, cash flow is still the king here, because rather than worry about the margin you're going to make for each particular project or ventures that you are in, I think managing your cash flow is more important now during this crisis. So, like I said, prudent spending is pretty much the name of the game now. Look for lower cost venture that can actually churn out a better margin. Well, again, like I said, not much out there, and try to be more innovative, because in the startup space, it's kind of borderless. Not necessarily you confine yourself towards Malaysian market. There are things out there in the market. I think you've seen like companies like Alibaba, or for that matter, we have a local hero in Grab. That actually doing very well. Exponentially over the years. So think outside the box with regards to the venture or business you are in. Don't confine yourself towards the Malaysian market. Otherwise, then it will be be a limited space for them.
Maybe, if I can ask you just one important question to probably the minds of the viewers is, what about how long does, from start, if I came to see MDV, what's the turnaround time for a loan? Take it's a good loan. And maybe if you can just share a little bit, what helps with the application process? What makes the application process faster? Yeah. What does help? How long does it take? And what should somebody approaching MDV do when they come to
let me answer you by explaining the process here, because I have two sets of team in business divisions in MDV. One is the business building, which is pretty much the hunters out there in the market. They are the ones who are actually outside the market to cover the whole nation. It's not a big team. We have 8 of them. So every application must go through the hunters, which they will give a set of checklists for us to actually start looking at the documents. So the moment they give the basic documents, is the first stage, like I said, is pretty much the basic documents just to clear the credit. So once it's clear, then a whole lot of information or a whole lot of documents needs to be submitted. Upon submissions of all documents, we are looking at between 2 to 3 weeks before the letter offer can be issued. So that's our timeline in terms of approval. So of course, then there's a process of documentation which involve external lawyers. But like I said, because the documents used in our loans is pretty much standards. We have assignments of contracts, the debentures, director's guarantee. So more often than not, the lawyers will be able to actually execute this very fast. So perhaps another 2 weeks or 3 weeks before the actual drawdown can be made.
Well, that's extremely good. 6 weeks if they got the documentations right. But I think that I need to caveat that the big if
exactly the documents information are essentials to our assessment, so it has to be there before we actually commence the assessment.
Okay, I think that's probably music to the ears of a lot of people out there hearing us.
Yep.
So to get everything right. That's brilliant. Yeah.
Yeah, 6 weeks is great. Let me. There's a question from Ali from Karachi. Is this open only to Malaysian companies, or are you open to a global audience?
It has to be a Malaysian incorporated company.
Okay.
Yeah.
All right.
Ali can come to Malaysia and set up his company.
Yeah. So Ali, come over.
For direct investment.
But the
There you
business can be done anywhere. Not talking about borderless, as I mentioned, but it has to be incorporated in Malaysia.
I see. Okay. And we have a question. How do SMEs contact MDV to kickstart the application process?
Okay, go to our website. There is a particular form where you can actually use to actually fill in, and we have the details of our contact persons or our, as I mentioned, some of the hunters that are out there in the markets. The details are there in our websites. Perhaps I don't know whether organizer later could share with the audience later. Those particulars. I can get my team to actually share later. My PR com probably also in this event. They could share with the audience later with regards to who they want to contact for the applications.
No, we'll put it out on LinkedIn. I think that's a given. We'll put it out, Roshan, if that's on my side and your side, and then I'll get it out on today's comment session. Yeah.
Yep, yeah. So and there's a website mdv.com.my. So for those of you, you can check that out. Ravi, maybe I guess one or two more comments are coming in, but while that trickles in, what sort of thoughts do you have, and then later I'm going to pose that to Aimi also in terms of your final thoughts as we wrap today up.
I think what we are trying to show out here today's program, it just shows that if you've just thought of bank financing as the only way, and a lot of people, okay, if you're running a traditional business, you're thinking, oh, let's move to something new. We want to get, this IR 4.0. That's the way of the world. This whole idea. There are other sources of financing out there. I wish MDV all the best to be able to raise more funds out there. There's so much liquidity, and hope they can go out and raise more money, and also on lend it out or invest it on into new companies. So I think today it's our first time. I think Philip was on last week also showing that M&As can also happen with smaller companies. I think today, if anybody's takeaway from today's session is, hey guys, it's not all doom and gloom. There are other opportunities. It's the time of crisis that we start thinking about other things. So here we are talking about non-bank finance.
Yeah, I mean, echoing what Ravi says, like I said, we're doing some bit of promotions here because in MDV, we have a specialized team. We call it Business Technology Advisory Teams. They are the divisions that actually looks at all these new technologies, all the sexy stuff. They are keeping abreast to what's happening out there in the markets. Because of these particular divisions, we will be able to actually assess the credit matters and put our assessments to our committee or lending committee in perspective, so that they have a informed decision to make with regard as far as technical or the technology part of it. Not so much of degrading the commercial banks out there, but what we heard in the market more often than not, when this kind of financings or this kind of technology financings, that when they approach the commercial banks, more often than not, they understand of the technical part of it hinders commercial banks from providing those financings. But we don't have those problems because we have a team that actually advise us on the technical part of it. I mean, for instance, like I said, a couple of years ago, like 5 years ago, 6 years ago, in green technology, commercial banks are shying away from doing green technology. We were the first one that actually supports all the FIT schemes under the solar, and that's the reason why we won the GTFS schemes then. Basically, the developers were unable to secure, so we played our role in that sense in serving the underserved, because those companies tried to actually approach bank, they are unable to secure. So going forward, we'll be using the same mandate, with same methodology in assisting the underserved out there in the market. So if anything, keep us in the mind. We are on the 19th year in business. Next year will be our 20th year. So we've been around to actually look at your financing requirement.
I think one final question is, what makes you guys so special? I mean, a guest here asked, your pricing is high. What's so special, and why should we as SMEs be using you? I guess this is a final question from one of the audience.
Again, I'd like to qualify. We're not the lowest in the market, but we're not the highest in the market. I mean, I recently signed a consent letter to a customer, we secure financing from commercial banks. I wouldn't name the name, but they are charging a double-digit pricings. So we're not the highest. First of all, I need to clarify that. Okay. Then what makes us so special? Like I said, we serve the underserved. We are taking higher risks in the sense that we're looking at the assessment different way. We are not looking at tangible security as one of the 5 Cs, although we would like to, so that makes us so special, because at the end of the day, if you approach commercial banks, the first thing they ask is, where's your tangible security? So we're just looking at the cash flows for the particular projects for us to assess.
Maybe Roshan, if I can enter and give the borrower perspective, that would be, and this is that whole point about that balance sheet, right? There's parts of your balance sheet that on the liability side that you can go to a commercial bank, right? And you want to, finance working capital. You're buying trading goods. You're self-liquidating. Yeah, go to all the, the main banks, the public banks. Everybody do that very well. Probably take your shop lot as security. Fantastic, and they can charge very low rate because of security. But when you're going to do something and you got a big asset which is on your side or probably intangible, or it's going to turn into this one, you got working capital in terms of the balance sheet side, which is a project, and it's not tangible because project goes wrong, there's no foreclosure on project, and you can get money back. It's an IT project, or perhaps I suppose the other thing we didn't talk is biotechnology and vaccines and testing around that. But you're going to do something like that, no bank's going to lend you money, And you got to go for someone who understands technology very well, is invested in understanding technology very well. They've got people who are knowledgeable about the technology. So when they look at a IT project, they know how to assess the risk, be it project management skills, what's the software being used, what's the deliverables, etc. They can assess it. A commercial bank cannot assess it. So that's a very big difference.
Exactly.
And I got one more question from an audience who's asking about acquisitions. I mean, and we talked about this last week. I think about SMEs acquiring good tech companies that are going bust and so on. Does MDV support acquisition financing in terms of looking at that at this point in time?
We don't do equity financings per se, but we are doing the projects for that particular company.
So meaning you wrap it as a project to acquire this company to enhance your technology? Okay.
Yeah.
Okay. So that's a possibility.
If it's the technology itself, then we do finance the technology itself.
Okay. Yeah, because it's a faster way to go to market, right? When you can buy up the tech through an acquisition rather than trying to build it from yourself, and there's a lot more commercial viability and so on and so forth. Okay, so I think there is a bunch of folks that are very interested in acquiring tech at this point in time. So we'll send them out your way. But thank you so much. This has been a fabulous conversation. I learned a ton. Ravi, your final thoughts as we wrap this up.
Roshan, get your CFO to contact Aimi.
We'll do, and even we'll definitely do, because there's some really nice tech also out there that potentially could be acquired. With that, thank you so much. This has been Rethinking Balance Sheets. Hold on, and we'll be here every Friday at 4 p.m. At 10 a.m. And we will see you next week, same time, same place. Rethinking Balance Sheets here on this special LinkedIn, Facebook, and YouTube special. Goodbye, everyone.
Learning is at the heartbeat of growth. What is leadership?